I will invite to the stage the host of our first panel discussion, Magda Radová, to continue with this wonderful discussion.
Thank you, Hanka, and thank you, Bas, for your story. Wow, what a story, and for your thought-provoking speech. Thank you.
Thank you very much.
And good afternoon, all of you. It's nice to see all of you in the room. We will now follow up on Bas' keynote with a panel discussion themed Mission Meets Market. And before I invite our other panelists to the stage, I'm curious about I would like quick sense of the room. How many of you think that impact and profit can actually grow together if the business is built right? Can I have a show of hands? Wow, amazing. That's exactly the mindset we need for our next conversation. It's my pleasure now to ask Silke and Nate Wyne, Silke Horáková and Nate Wyne to the stage. And please join me in warmly welcoming them. Personally, having spent the past decade in impact investing myself, I'm really excited now to explore together with our panelists how purpose-driven entrepreneurs and investors navigate their journey of scaling boldly, building global markets, and shaping a better future for all of us. I'll sit here, and while we make ourselves comfortable here, a little housekeeping. We will have 25 minutes together here, and then there will be a longer break for all of you. And I would love to encourage you to be curious and ask questions. Ask questions about Bas' keynote, ask questions to our panelists, and send them via the Eventi app. Throughout the panel discussion, we will see your questions on the screen, and you can like the ones that you are most curious about. And now let me briefly introduce Silke and Nate, because Bas introduced himself quite a lot during the keynote. So Silke is the co-founder and general partner of Tilia Impact Ventures, the first impact venture capital fund in Czech Republic. She's also co-owner of Albatros Media and seasoned investor, philanthropist, supporter of social enterprises and independent journalism. And we have actually worked for a couple of years together, Silke and I, so if we seem familiar, this is why. Welcome, Silke, to the stage.
Thank you.
And Nate is joining us from Austria, is co-founder and CEO of Floodlight, a climate data intelligence company. And he has background in finance from Wells Fargo and Silicon Valley Bank. And he's bridging finance, tech, and impact and helping investors and asset managers to make data-driven decisions that align with their values. Welcome, Nate. Bas, anything you need to add for your introduction?
I'm okay. Thanks.
Great, let's dive in. I would like to start on a personal side. Silke and Nate, what inspired you to start your fund or company? Silke, would you like to start?
Yeah, maybe only very briefly. It was, I'm a financial investor by profession, and that was my career. And in 2010, I attended a conference in London, and there was a nice lady who introduced impact investing. And I said to myself, wow, you can actually have it both. You can do the good and you can have a financial return. That's what I want to do. And it was 2010, coming back to the Czech Republic. I mean, you know, all this was not much to invest in, if you look, you know, for investments in this direction. So I decided to help the ecosystem to develop this numerous accelerator programs. And then in 2018, I co-founded Tilia Impact Ventures, which was by that time the first one in the region of Central and Eastern Europe. So that's maybe that was my eye-opener, and I needed this eye-opener, and sometimes you need an idea which changed your life, and this idea changed my life.
Amazing, thank you. Nate?
Mine's very similar to Bas. My wife was making fun of me because I worked at Silicon Valley Bank before it collapsed, so it's really not my fault. But a lot of the idea for Floodlight came from, I was doing foreign exchange futures at the time. So customers would call and essentially buy insurance on currencies going up and down based on their revenues and what they had to pay out. And my wife was looking over my shoulder as I was working on a Bloomberg terminal to figure out, after I completed a trade, they wanted to put money in specific funds that didn't have a lot of greenhouse gases, or ones that had a lot of females on the board of directors, et cetera. And she was a librarian by training, and so she was looking over my shoulder at Bloomberg. It's meant to look very sexy and make you feel really good about spending 35 grand a year on a software department. And she was saying, like, how are you getting this data? What is the data coming from? And I was like, oh, it's Bloomberg. It's got to be right. And she was like, no, show me. And so we would click onto the footnotes, sometimes 7 layers deep, and almost all of the sustainability data, so greenhouse gases, climate risk, et cetera, I found out were self-reported. So if a company gave itself its report card, that was what got copy-pasted into almost every major data platform in the world. And it really made me furious, because I had directed hundreds of millions of dollars on behalf of my clients into ETFs and index funds and other financial instruments on the basis of data that I thought was sacrosanct, that I thought was true, and in the end was just a lot of corporate cheerleading. So she just looked at me and she's like, well, what are you going to do about it? And then we started putting a company together.
Thank you. And Bas, what is driving you these days? What makes you wake up in the morning, hopefully not awake at night anymore?
No. So I'm still involved in Fairphone, but in a non-operational role. So I'm still in the board. I love doing that. It's fantastic to see the company grow. Also to learn different things, right, at different stages in the company. And I'm also in the board of my former art school. I went back to art. I thought, wow, it's so great to be involved in something that doesn't involve a business model, right? I think art is also important, right? I believe we need a cultural transition. I think the economic system is one of the main problems is greed and selfishness, right? And if you want to address that, you need people that can address that, and you can build you can't do that with a unicorn for sure. You need a cultural transition is something that goes back to how we think and how we behave, and I think the cultural sector, and I'm not saying it's the only one involved, has an important role in that, and that's why I'm happy to be involved in the cultural sector still.
Silke, now that we heard what drives you, all of you, I'm curious what makes Tilia, your fund, different from other VC funds in the region. And I would love to get to the elephant in the room, to the trade-off between scaling and impact. So what's your position on that? What are your return expectations? And if you can share some details.
Of course, with pleasure. I mean, impact investing has been around for some time, starting in the US and coming to Europe. It started maybe in 2000 in Europe, I would say. The woman who was enlightening me was actually the first person who founded such a fund in the UK. And I have to say, the sector has changed a lot in terms of return expectations as well. When we started Tilia 1, that was what we called concessionary capital. There was sort of extra category for impact capital. And then there was a lot of events, not much time to go into detail, but there was awakening through Fridays for Future, and then we had the pandemic with all its social consequences, then a push from the European Union on sustainability, and that all led to something, what happened very fast, that the impact investing merged into the tech sector, I would say. So it's called tech for good today, I would say, right? And with this also the return expectations. Nobody is talking much anymore about concessionary capital, which has also its shortcomings. I mean, in our second fund, in our present fund, we are targeting market returns. And I will tell you how to do that. But I'm deeply convinced impact capital can make market returns. And that's mainly for the reason, coming back to the question, can we achieve unicorn status in impact? I think we can, and you are on the best way to go there, of course. But I think mainly due to the reason that impact investors react on challenges which actually are driven by socio-economic megatrends, right? We are near a tipping point in our environmental system, so what is the answer? Energy resilience, it's carbon capturing, it's precision agriculture, it's saving, our nature with biodiversity, and it's called biomanufacturing. These are the solutions, and we have all invested in all of them. And that makes, I think, huge demand as well, and also the growth potential. The same is true for the social side. Look at our healthcare systems, look at our education systems, and AI-driven solutions can push a lot of accessibility, personalization, quality in healthcare, and what we are looking for as an impact investor, long-term positive outcomes. So I think this is the main driver why I think we can get to unicorn status. And of course, there are frictions, and it's always a friction in my experience. I'm curious about your experience. When doing the right thing is somehow contradicting or intuitively contradicting your growth metrics, right? And I can give you examples. Healthcare, maybe we can talk about this a little bit later.
Let's talk about it later. Yeah, I'm curious about your experience, Bas, Nate.
You go first.
Yeah, for us, I would say it's directed a lot from the investors that we let in. My co-founders and I, when we got together, we were given really strong advice by one of my mentors to let in zero jerks. And the concept was basically like if an investor was going to get a fancy car or a nice house or a good watch from my effort, would I want to high-five them because I was glad I gave them that, or would I be really bothered that I essentially created more of a monster? And a lot of what our effort has been with the people that have invested in Floodlight so far is how can you help us continue on this mission? Because it's hard when you have people that are saying, I want to put in $500,000 or 2 million euros into your company, but you don't like them, and you know what they're going to do is shift your company away from its mission. It's really tempting to say, pull it in. But those are the moments when you really have to look at what you're doing and look at the impact and say, okay, this is a shortcut to an acquisition probably, instead of actually moving forward to really change the market. And I was really inspired, Bas, by what you did. We've done a lot of work in the Congo on essentially using our satellites and sensors. That's one of our key kind of differentiators. We take direct measurements of greenhouse gas and climate risk. We've done a ton of work in the Congo for the same reason. There's a lot of mine operators that are trying to pitch to all of you in the room to say, look at how clean my supply chain is. You should buy the end product from me. So that's honestly been the most encouraging piece, is that hopefully people like everyone in this room are willing to actually vote with their pocketbook too. Because if you have a wonderful ideal in conferences and when you're sitting on a panel, but then you're just going for a bare bottom price on every product that touches your life, you're essentially killing the movement.
Bas, what mattered the most when choosing the right people on your journey or the right investors?
Well, we've lucky. I don't think it's luck, but it was a choice. It was really a choice that we wanted to do it through crowdfunding, right? And even though people really told us as well, this is going to be very impossible for hardware. We beat all the kind of like weird statistics that say things are possible or not, and we basically built the company up to like a healthy like 10, 15 million turnover, I think, euro turnover with purely crowdfunding. So we crowdfunded the first 25 million euros just with a pre-sales model. So that really helped us to set to set the core of the company, and with the core I mean really the purpose, and everything was in place. Right, even the articles of association, and even going out there, right? You promise people. Our promise was change in the industry, and that's why people bought our phone. I still buy our phone, and maybe not purely for that anymore, but at that time, that was the reason. So it was not possible for investors to step into a company and say, "Well, let's change that ship," because that would kill the company. So I think it's it's a difficult line that you're walking, because I set up a new company after that, and there we were like very radical, and we set up the company steward-owned, which means that all the shares were non-voting share redeemable by us. That means that we could buy. Basically, it boils down to separating money from power. So we said you can invest in the company, you have your share, and we'll pay you back, and you can even drive a nice car from it if you want to, but you have nothing to say over the company. So that means that you will not steward the company. The stewardship stays with the company. Finding investors based on that model is very difficult because investors want to have the whole investment model is, I think it's a flaw, also an investment model, is based on a business model that you put money into something and that you sell it at a higher price. So you're kind of like, you want to have an exit perspective as an investor, and that makes it so difficult that everybody puts money into a company, wants to get out at a certain point. If you have no voting right, you have no way to say whenever you get out of that company, unless the company starts saying, well, we pay you back and then you can get out. So there are mechanisms to put in place, but those mechanisms, like steward-owned companies, like I said, separating those two things, are also not ideal when you're really looking for growing your company in a faster way, or you need more capital because you're in hardware or something like that. So yeah, I have experience on both, and with Fairphone, I'm very happy that we had our mission really crystal clear throughout the whole journey, and that also means that you will get people on board, and they can't really mess up your company because they buy into something that already is established.
Thanks, Bas. Silke, what do you look for in founders, and what mechanisms could you use to protect the purpose of the companies that you invest in?
Right. I mean, we invest in such guys. Look at them. No, but I think it's our first principle is always really the alignment with the company. This intentionality about impact, right? Which is difficult to assess if you have an online call with a person who's, I don't know, somewhere in the US. But we always start a conversation with the question, so why are you doing what you're doing? And that's already an important question, I guess. And then, of course, there's a couple of other criteria regarding the impact, which means, it's innovative in an impact sense. Related to long-term outcomes, like your phone, for example. We look for models where the business grows with the impact, the lockstep model, ideally. We have done other investments before, and it's always a tricky question, by the way, because I think technology can be used in different ways quite often. So we want to see this locked in. Then we look at the impact, if you can measure the impact, if you can capture the impact, because that's an important thing. You spoke about the theory of change. So that's what we normally work out with our investee companies to see what is really the contribution of this solution to the solution of a big problem in the world, right? So we want to capture this contribution specifically from this company and seeing what are the long-term outcomes. And that's what we are interested in. And we set up the KPIs, and something which is very important, that you want to really hammer it in the DNA of the company. So that's where you need alignment. It's by setting the KPIs which are motivating. We as a fund are motivating also. Our financial motivation is to fulfill the impact KPIs of our portfolio companies, which is a very important principle to lock in impact in the entire system between the investor, our investors, and the portfolio companies, right? And then, of course, we have the mission statements in our term sheets, and we have always the freedom to step away through some mechanisms if we feel the company would go in another direction, right? So that's about it.
Thank you. I would like now to take one question for the audience that we received, and this is, what is the most common misconception founders have about building an impact-driven business at scale? We are a bit short of time, but if you could quickly come up with one. The most common misconception founders have about building an impact-driven business at scale.
You have to give up. I think like the key, I think a lot of people look at companies like ours and say, oh, you're not going to make as much money or you're not going to grow as fast because you're also relying on human goodness. And I think that's a really, really cynical way of looking at humanity. And if you think about it, all of us are in this room right now. You get to pick why you were here. But I was especially thinking when I heard the government of Czechia talking, there really needs to be a lot of focus from the government as to what's working and what isn't that aligns with the government objectives. And since every formal business is going to rely on good banking, good lending, if that transparency comes to actual data, then everybody wins and the politicians look awesome. But if it's always quiet and people are like, I'm just going to go for the cheapest, it's really hard. So I would say to answer the question, I know that was kind of a little throw-in, is if you can be as fair as possible with what the story is, it doesn't matter if you actually have a good objective with it or you're just trying to become a unicorn quick, the achievement is the same because people will not follow a massive tribe or a massive new phone unless they actually feel bought into it enough on the financial terms or the personal terms.
Any other reaction?
I mean, there's no trade-off. I think that might be an excuse also sometimes. So we want to see both, and the company can be only successful if it's growing. That I would say. If you want to achieve scale, you have to grow, and you have to do it in an efficient way, I would say, right? So it's not a trade-off.
And what is one concrete shift in mindset, in investment, in governance that could accelerate the rise of companies that benefit all stakeholders, be it impact unicorns or we have other animals in the arena as well, camels, zebras, that would be probably you, Bas.
Yeah, the zebras as well. But the thing, I mean, the whole problem is that we're all way too like short-term focused, and I think we know that, right? And I find it sad. Even look at my own kids, like the attention that people have. It's like puff, 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 and even this whole thing with unicorns, right? Why does it? You're a unicorn when you do it fast. I think it's really a mindset, and again, it's this whole cultural thing that I think we need to chill down. And everybody needs to chill down. And I think chilling down the whole economic system is going to benefit everyone because we don't want to be like put under the amount of pressure that we're on right now. Right? We're doing this to ourselves as a choice. The whole economic system is a social construct. We choose to have it done this way. And I think you just need to speak up, and we need to show that you can do it in a more tranquil, chill way with all the performance-driven KPIs, everything. But I think it is also the hardest thing, right? If your system change means that if you're going to want to change the system from within, it means you're also going to be dictated by the same stupid rules of the current system. So you will have to play by that book, but just little things that you are able to control and can be very big in terms of the systemic impact of it. And I think the little steps that we've taken with Fairphone and not be too, you can change, of course, if you want to create change, there's so much change you can do in the world. But to be able to make it do it in a systemic way, it takes time as well. So also allow yourself to take time to make that impact, allow yourself to grow your company, allow yourself to not be rushed into the success when it happens. Yes, of course, when something is going the wrong way, you need money and you need to find investors, and you might get a different kind of view on that money as well. It happens, of course, when you're under pressure. But try to stay away from the pressure that this whole system is putting onto you because you don't need it.
Chilling down, what would be your final thoughts, Silke, or an insight that you would like the audience to take away?
If I can still add to this question, because I think it's important, what you have to change is we have to change our view, not on one climate solution, but to see the social consequences of it. As you have presented today, I think it's very important, and that's getting lost somehow with all the return expectations from all the climate investments. I think we need to look at climate adaptation, at all the social consequences we are facing, and also as an investor, to look at the entire system and the entire impact we are creating, or even the negative impacts. So I think the systemic view has to change. And long term, yes, we have partly a solution for that. We are looking at patient capital to provide, but I think we maybe need completely different vehicles to do so. I agree completely.
Yeah.
And my final thought, because we are short in time, I add this immediately, is I think you can build great impact companies, even unicorns, if you hammer your mission in the DNA of this company, if you stay true to it. And it means if hiring people, designing your product, designing your KPIs, your partnerships, your investors' choice, I think that has to be all true to your mission. If you hammer this in your DNA, you will be successful.
Amazing. Nate, your final thoughts?
My last thought was that if sustainability can be profitability and mixed, you shouldn't have to pick one or the other. So I think the biggest challenge is being able to do things sustainably, but still being realistic enough to know that if it doesn't deliver a financial value, it won't survive your next round.
Thank you so much. Thank you for taking us beyond the scenes of building an impact startup and being an impact investor. Thank you, Bas, Nate, Silke.
Thank you.
Thank you all.
The time is up.